Hello traders, welcome to the channel. I'm your host Running Forward. I said I'll probably do a case study on CHWY because in one of the videos I said I entered a trade on this date, August 26th, and then I said I'll follow up and then tell you what happened. So today that's what I'm trying to do. So I have already closed this trade yesterday because today, September 10th, is before the market opened. They had the earnings. I got burned before. I didn't want to hold my position through earnings because it can go either way, and I have been burned more than I've had um, been surprised in a bad good way. So I choose not to hold it through earnings, and it turned out as the best idea that I have made for this stock. So anyways, a little background. So this one, we come back to the weekly chart. That one, when it was about here, in at about end of July time frame, I said, this one, it looks like it's pulling back to this weekly trend. So keep watch, see what price does, and then sure enough, the price bounced off the trend line, and then it formed. If you look at this one right here, if you connect the low of this candle and the low of this tiny doji candle, you get a trend line. And then on this day, August 25th, price pulled back to this trend line, and then the next day it gapped up. That's when I got in. And then for this trade, the stop loss is below this green candle on this day, on August 26th. And then the first target is to take out this recent high. That's not a whole lot of percentage gain there, but I said if it has more strengths, it can probably take out this resistance area here, which is about 43.50ish, and then maybe even close the gap if it can go higher. So when I got in for the first couple of days, it went as planned, as hoped. But then it reversed back down. But it's very close to where I would have closed it out, but it didn't. I decided to hold it a little longer to see what it does, because the chart was still looking good, because even with this red candle, you use this green candle here as the pole. That's still like a flag kind of pattern, so it hasn't gone too bad yet. So I decided to wait, and then it recovered. I was happy, and then because actually get past this area, this first target area, and then I was holding it back then. I think I had about 18%. I was about 18% in the green, so I was debating whether should I should close it out, but I decided to hold it one more day, and that was a mistake. Or think back, maybe I should have, knowing that this is the next resistance area, maybe I should have put the profit limit order, so that when price reach this area, I get out. If I did that, then that would have been a much bigger gain on this option trade. But I didn't. So it came down on this day, and then I actually hold it a little one more day, and then I sold it yesterday, on the 9th, for a little over 12% on the option trade. I got in on the 26th of August and sold on September 9th. So that's about 2 week time period, and two weeks and 12+% gain. So that's not bad. Um, but it could have been better if I had set a stop loss or profit taken limit order here, then it would have been better. But this is just once again proof that with earnings, anything can happen. If I have held it one more day, I would have been, not only would I not have made money on this trade, I would have be so deep in the red. So hopefully you find some value in this video. Well, this is my first case study. If you have any comments about what you want to hear in this kind of videos, drop a comment below. All right, until next time. Bye for now.